Hello everyone, my name is Matt Ferguson from Sønr, and welcome to another of our Insurtech 100 series, where we try and get under the skin of the key topics and trends which are impacting the insurance market. Rather than listening to me drone on about them, what better way than to speak directly to some experts? And this time around, we're going to be diving into the world of parametric insurance, where we've seen both a range of established and emerging use cases driving interest. To help us understand, explore, and gain insight into this area, I'm delighted to be joined today by the founding team from Riskwolf. And when they're not coming up with possibly one of the most awesome names for a business out there, they also run an Insurtech enabling anyone to build and operate parametric cover. Not only that, but you've probably also just seen a very, very recent good news, but perhaps I'll let the team tell you all about that themselves. Now, through the course of today's discussion, we'll no doubt get to know more about Riskwolf, but perhaps let's start with some introductions. And gentlemen, firstly, thank you very much for your time. I really appreciate it. Thomas, perhaps you could kick us off with a bit of an introduction.
Yes, thanks, Matt, and thanks for having us today in the session. Definitely, my name is Thomas. I'm the co-founder and CEO of Riskwolf. My origins are really have more than 20 years of experience in the insurance, reinsurance, more or less non-life or P&C market, a lot of reinsurance and large commercial topics. And throughout my whole career, I've been involved in a lot of digitalization topics, how to move the whole value chain of insurance, reinsurance into a more digital way, how to enable brokers, how to enable insurance carriers and different partners in this ecosystem. And I think that is a little bit also where the journey of Riskwolf started a couple of years back, when René and myself saw there's new opportunities, there's new ways how to do business. There's also new ways how to do parametric business. And so that's when we founded Riskwolf. And happy to be here, and thanks for having us.
Hey, no problem at all. Thank you. René, how about yourself?
Hey, so my name is René. I'm co-founder and CTO of Riskwolf. And what I've been doing the last decade or so was I always was developing and architecting data-intensive applications. And half of the time I spent like as contractor working for a large reinsurance company in Zurich. And this was also basically when I met Thomas. And at this project, we already explored, or we had some idea exchange around data, around the parametric model, and also about like new opportunities, especially in the technology risk space, where we have seen a kind of a blind spot at the moment in the industry. And this was also a little bit of the initiation of founding the company. And yeah, this is basically why we are here.
Fantastic, thank you. So why don't we dive into it then? And we've seen in the market growing interest, and we've certainly seen it amongst our customers too. Various inquiries over the past 12 months or so. But look, what are some of the growth opportunities for parametric insurance, and how can it help close the protection gap? Thomas, perhaps you could field this one for us.
Yes, definitely. I think that, as you said, there is growing interest in parametric, and definitely what we see, two areas where basically there are new insurance models now looked at. It's around all weather risk and how the weather risks are really basically causing disruptions and also losses, and how they can be utilized as an insurance product to protect customers. And the other one is more around the new types of emerging risks in technology, which also we see a new type of growth opportunities, especially around cloud and internet availability and downtimes, which means that's also naturally the key connectivity and the key topic in terms of where we see also parametric usage. Generally, we see for parametric, it's definitely from the model, naturally one of the key drivers is that the data itself, you use basically what is the parametric actually? It is insurance, which is based on an objective trigger, and this trigger is an objective third-party measure, which the insured cannot manipulate. So it can be a weather event, and it also can be a certain index, which is based on measurable information. It also can be an IoT measurement. It can be a satellite imagery, which is utilized as part of a claims process. And basically the growth of data in the IoT space, in the data space, in the monitoring, in the measures, is really has been very high in the last couple of years, and the cost of this data also has been decreasing. So which means that now all of a sudden it's possible also to utilize this data in the insurance industry. And the second big driver from our side is probably more on the way how underwriting is done. We see much more data aging, which means naturally also risks are changing, risk patterns, weather patterns are changing, and digital risk themselves, they don't have a lot of traditional loss histories. So the traditional way to underwrite business with loss histories is not anymore either it's not anymore usable, or it's just changing too fast. So there needs to be better models utilizing kind of more real-time data to start underwriting risks. And that's also a space where the parametric model fits in quite nicely. And maybe the third element we see is also that there's protection gaps in the market, especially what we see in Asia. Certain insurance protections are not available due to it's just too costly to run claims processes. And with parametric, what you can do, you can really automate the claims process, like for small farmers, for gig workers. And here we see also a huge opportunity as a growth.
Maybe just to adding to this one, what is also quite interesting, especially around the parametric model, is that you can go into areas that are quite hard to insure with an indemnity-based, meaning if you're now really moving from a kind of a physical asset-based world into asset-related risks, for instance, around business interruptions or anything that goes more into revenues or lost cash flows, where at the moment there's not a lot of insurance protection out there. And especially if there's protection, it's sometimes quite complicated. Just think about like cyber claims. It sometimes takes up to 3 years to settle this. And so on. So meaning with a parametric model, you can really go into into risk areas that are quite novel. So I mean, it is also the interesting thing once somebody really gets into the thinking about the parametric, everybody comes up with quite new and exciting ideas, really getting into like productivity losses, revenue protections, nature-based assets. I mean, you name it. I mean, in the end, if you have really the right information, the data, and if you can really measure it and having these robust measurements on top, then you can also insure it.
Got you. And it sounds like all of the examples you're citing there sound well beyond the kind of traditional flight delay products that maybe we saw a year or two ago, really gaining interest. What are the kind of major trends that you're seeing in the market that are driving that? You alluded to the cost of the data coming down. What other things are driving this?
I mean, in the end, when we just look at the market or on where the future growth is, meaning, for instance, there are really long-term mega trends or that everybody's aware, meaning definitely one around climate change, where, for instance, I think there's some reports out there that in the next decade, there will be like new fresh premiums being generated around 160 billions, or even in the technology/cyberspace, where there's also quite a significant market, and so on. So basically, they're roughly like a kind of new risk areas that are really caused due to a significant shift, also how we live, how we behave, and this kind of new risk areas that basically really expanding the scope and the target markets, meaning this is quite interesting when you go then into this one, and there's not also like insurers are not really pushing actively at this one because usually it costs a lot. So I mean, it's really like an upfront investment. You have a high risk to really explore that. And I think also with our contribution, what we really try is to lower these barriers for entry, really to go in, to start experimenting, start exploring, and so on. There's a little bit what we, a strong believer, are basically being part of this kind of long-term trends and also really helping them to solve them.
That's got me thinking a little bit as well about the kind of the audiences that you think those trends will start to impact most as well. Particularly when we talk about cyber, SMEs come up quite a lot as an audience, maybe who've particularly exposed. Where do you see the kind of the major protection gaps that perhaps parametric products could look to support?
As definitely René, go ahead. Or we can. Yes, I think both have.
I think we can just say a little bit where we're getting the inquiries from. So really through our webpage is at the moment mainly around like extreme weather patterns.
Yeah.
So meaning really this kind of failures either like in the crop space, in the travel space, and then also like really around climate. I think this is like quite a burning topic at the moment. But also Thomas, maybe you can also add also the other topics that we're currently also exploring in that sense.
Yeah, I would say there's three areas. It's one weather related, which again, as you mentioned, also type of outdoor event insurance, also sport insurance, where basically events are basically rained out, hailed out, and then basically there is always then also whatever certain specific sports, golf, sports, snow, skiing, sailing, where also weather periods have a really big impact on the quality of what you're doing, and typically they're all during a certain time of the year, and so you have a high dependency that then the weather needs to be good, and other things are more also like in solar we see also all of a sudden also a couple of requirements on like guarantee products, as a peace of mind products where you can then basically embed this type of guarantee towards a customer where there's not even a big insurance context. We also see benefit plans, which benefit can be embedded in the overall offering or as part of a discount offering. Gig workers, we've seen a lot of requests to get better insurance protection for gig workers, especially more right of emerging economies, Africa, Middle East, and ASEAN. So that is definitely something. I think on the technology risk you mentioned, the SME, we see here. One topic is when we look at the SME space, there's two parts. Is a classic cyber insurance, but then typically a lot of SMEs don't have anymore a lot of own data centers. They use cloud data centers, and they so have a high dependency on the cloud service, which typically is not always linked to cyber risks. It can be just an outage of the service. So their Microsoft is down, or other services they use with customers are down. And here we see a kind of like small productivity coverages, which can just support the SME with regards to a 1, 4, 8, 10-hour outage, where they need then to hire some IT resources. And this kind of smaller packages we see also as a kind of a go to market plan. And then there's also one area, René, I think we've seen a lot also novel stuff. So you've got some requests, we've got some requests on biodiversity, carbon offset, new type of disinformation, but also we've seen smart contracts coming back, people with smart contracts. What about the parametric offering in that? So there is a lot of also novel triggers, also economic triggers we've seen now, which could be utilized in parametric structure.
Wow, so there's a pretty broad range of potential use cases to be solving for. Kind of supports some of the the forecast market sizing that you mentioned earlier on in the discussion. What ultimately is going to be driven by some of the data that's out there. So perhaps maybe let's move on to what are some of the alternative data sources that are being used in parametric insurance. And René, perhaps that's one for you to take first.
Yeah, definitely. What we see in the end is our place to play on this kind of availability of new data sources, meaning the growth of data and then also the cost of data is decreasing. And I think that we also can distinguish a bit between really new sources of data, where we, for instance, last year really developed projects with an Australian spin-off on university, for instance, around like internet downtimes. Meaning, what if, for instance, the internet stops working on a large scale basis on a city, impacting like the whole city with a kind of a big connectivity loss, like into telco segment, into data segment. I think there's one of the categories I would put it into the bucket like of more alternative data source. So really measuring something new, for instance, the internet or biodiversity or like any of those topics where you can really build up new indexes on top. So I think that's one category, and usually this kind of information, this is more, I would say, than really enabling very new use cases. But the second one, what is also quite exciting, is in the end, it's not only about new measurements, it's also about better measurements. Because usually when you talk about parametric insurance, one of the hindering factors is always like basis risk. Yep. And this is sometimes just due to some factors because it's not measured accurate. Huh? Meaning if you just have a 50-kilometer radius or like an 80-kilometer radius for a storm track model, you might not be at the right location. Huh? So meaning there you run into the basis risk problems. But now like new data companies out there, they're really now looking into, for instance, launching satellites to a much more accurate measures storm tracks. And if you can really measure it more accurate, you can also basically model it through, and then also with this one, reduce the basis risk information. And this is now also happening in a magnitude of different areas, meaning it's really about capturing better index values, capturing, for instance, soil moisture and all the others, meaning really about available information, but just do it more accurate, more granular, and then also more frequent. Also, yep. Because sometimes there's also not a lot of people are aware of is the information availability. It means the main benefit of the parametric model is that you can do really fast payout. But the challenge is sometimes that these data sets that are currently leveraged in these contracts, they only publish like final information after like weeks time, or meaning you need to wait until the final information comes out about the measurement, and then only you can basically base the triggers on top of that. And these new data companies, they're really way more faster. They can really model through and then really within hours deliver modeling results, or even delivering then the right trigger values. So this is really about getting more accurate measures. Yep. And the third category, and this is also interesting, what more and more people are doing, and where not yet a lot of, I would say, applications in the parametric space are, is really more the combination of information. Meaning, just take the example, and also sometimes the problem is some methods cannot be used because you have a satellite and then you run into a kind of a cloud cover where you cannot measure like a flood. Then you basically, you have an event, a flood event, but you cannot take a picture. But now you have possibilities with more advanced modeling capabilities to combine different types of measures, meaning really more sensor-based or really more satellite-based and so on, and then come up with a kind of a data product that sits on top. And with this data product, you can then really also solve some of these challenges. I mean, the obvious one is more about if you have no data available, you can flip over to another vendor, and then you have to measure. So that's, I think, the third category where you also can do a lot. I mean, it's not totally exciting, but it's really something I think where a lot of things are currently happening in this area as well. Yeah,
there's a huge amount of data out there already, but the ability to harness and derive meaningful insight from it is an ongoing challenge for many, of course. What about the kind of, we talked previously about the direction of travel. What does that look like from a data perspective? In the next 5 years, perhaps, where is it that just there will be a greater proliferation of data, just more of it from more sources, or do you see data being available from to support products in specific sectors, maybe driven by problems or challenges in those sectors, or is it something else? What are your predictions for the future?
I think definitely the data, I think, is growing, or it becomes much more and more people starting satellites, taking more accurate measure, and exactly pushing this direction. Also, like there's a lot of funding going into this area, really having done like either data companies or companies who are really sitting on top of data and doing modeling and so on. I mean, I think this is like a huge industry that's growing. But the challenge is also to how to get this data into insurance, and then also how to get it basically into parametric models. And sometimes also we are quite surprised when we're also talking with large reinsurers that some of them are not really aware of this kind of, I would say, multi-million Series C companies out there who are already doing that, and that this information is there and could be leveraged. Right? So there's a little bit this kind of things, okay, we have done it the last 5 years and it's now up and running, but really much more actively exploring that in the use of data and information in even existing use cases, but also like into new use cases. I think this will definitely also help then the adoption of the parametric model in the industry.
Yes, and also for us, it's not really also, again, as it's an important point René makes, it's not about just the risk transfer, the parametric insurance. It's also about you utilize the data for prevention, for risk control. You can utilize it also for information, education. So it's not about just utilizing data for one purpose. And what we see is the parametric model is always could evolve also with regards to how you embed these products into current information, education, but also financing projects. So and then you add a kind of a transfer element, and then the parametric solution would be ideal since you already utilize data insights you gain during the project. So you already have a kind of an exposure information, and then you can utilize it also towards the customer. So you might have SMEs, you might have small travelers, you might have big corporates. And what we can do with the model on the parametric side, we can actually calibrate for each of these individual insureds different types of programs, utilizing the same data assets. And that's, I think, the power of data. And that we see currently, it's a little bit lost in the insurance industry in all these silos, since typically insurers are organized in line of businesses. And then you have weather, and you have NatCat, and you have all the different business interruption topics, and you have property. And so you already talk with more underwriters and more actuaries. And what we can bring together at Riskwolf is a more data-driven perspective on these risks, which we believe is going to be growing the market for companies like us, and then still embedding that into new players. And the other one, we also see new tech companies out. We see, for instance, in agriculture, a lot of new players who are now so-called agtech. So these people are really bringing the right technology to farmers. And also here, we basically working now in a couple of countries, exactly bringing in the parametric solutions with these agtech companies to farmers and utilizing their data assets already set up. So I think it's going to be more embedding. It's going to be more growing with the data, but insurers need to be also active on that and not wait it out.
I think this is a good point, Thomas. There's a little bit there's a current thinking around this line of business, because when you think around parametric, it's really about the trigger. And if the trigger is a rainfall or a temperature, like the same temperature trigger can be applied in X lines of business, or it's like you have one and the risk is the same, or this is a totally different way of thinking, because you don't need to understand the individual customer exposure anymore. You need to understand the events, and then, for instance, when you take the example about frost, or you have like a frost trigger, the frost trigger is relevant for agriculture, it's relevant for projects, it's relevant for travel, and so on and so forth. So meaning, in the end, it doesn't make sense to put this into any of those domains, or you need to have basically a kind of a cross-functional view on this, and then having the application in the individual customer segments. Because also from a risk steering point of view, you need to basically look at that much more from a like data trigger point of view.
Okay. So you alluded to what Riskwolf are doing, your perspective on this. Perhaps now's a good time to have a chat about that. And what are the services that you're offering? I'm always really interested by kind of practical examples of maybe the types of risks that parametric products are covering, or how your solutions are supporting. Some of the examples that you've mentioned over the last few minutes. Sorry, I didn't help you by just blindly offering that one up, but Thomas, perhaps.
Maybe I can take a first step, and actually the model itself, what we've built up, is a kind of a parametric service layer, which we basically offer to local insurers, MGAs, so basically people who are in the market to sell insurance to their customers. And what we've built is kind of a parametric service layer, which has three components. One component is basically we onboard the data insights, the whole data sources oracles. There can be weather or technology risks, and to that you then dive down, as René mentioned, in the accuracy, granularity, the right data source for a client. There can be different ones. Then we have one engine, basically where we already mentioned the modeling, where we really can already execute kind of actuarial pricing modeling, which is basically reflecting the risk, the frequency of this risk. So for instance, here we can do that for crop insurance, for weather-related travel risks, where we can also do that predictive. So before the event even happens, we can utilize some data prediction, weather predictions, or we can utilize really historic data like the rainfall duration, the amount of rainfall during a certain season, and then we just calculate the overall amount of rainfall and see if that meets a trigger or not. And the third element which we're offering is more or less the kind of the go-to-market package, which is basically a quotation, binding, monitoring piece. Mm-hmm. This is really utilized by the MGA or by the local insurer with their clients. Can be with direct channels, can be with broker channels, and there we basically enable these clients. For instance, we're supporting here MGAs like in North America to build up a cloud outage component as part of a cyber policy. So it's an additional line item. Or we support agtech companies with a crop farming quotation, which then can be brought into their agent network. And finally, naturally, for all of this risk, we do then support the monitoring. So we basically monitor these risks on a very granular level. You can think of that we have individual policies, and all these individual policies have then like conditions, like weather conditions or a cloud technology condition. And once these conditions are hit, we then basically initiate a claim process. And basically what we do here, we then basically prepare the claim notification, and this can be taken over then by the insurance carriers, MGAs, and also the reinsurers to settle the claim with the customer. So this is a service offering and enabling actually the insurance market to really bring these products into the market on our hand.
Yes, I mean, this is also the vision in that sense that you really want to move the, I would say, like the product structuring innovation more from the ivory towers into like the people who really sit together with the customer, who really say, okay, I have an idea, I know what is the pain point, I know about the triggers, I think this is relevant, and then I would want to quickly basically iterate and really get first price points, and based on that one also supporting a little bit this kind of innovation journey of the local partner. So it's really like one piece is definitely always a kind of a big stuff where we give them like the Lego box or a little bit of these different parametric components, and like the MGA can really stick it together to the channel. Say, okay, this client might be like a weather trigger relevant or like a storm trigger, or for another MGA is more interested into the cloud topic, saying, okay, I want to add like a small lump sum payment for a cloud outage, like these kind of topics. And the nice thing is when you look at it from a risk steering carrier point of view, everything is normed. So really what we really achieved is having a kind of a common structure. You can just think about like a financial instrument, but for parametric, so that this information is also something that is quite powerful in the risk steering point of view, because we're translating all this waste amount of data into like a common structure that has a financial quantification. And then you can do different things with this, or you can really then say, okay, what is going on at this MGA? How is the risk developing? And then as a carrier, you can way more faster basically steer there, meaning this kind of usually this kind of a ping pong, you can really enable and be much more proactive and also see where your risk is developing. And I think this is especially required for new, much more dynamic risks, where you can say as a carrier, so this is basically, I give you 10 million capacity and we talk next year. So I think this is not working anymore, and these kind of models need to be like a common streamlined process where everybody has then access to more information, so that also in between you can really then react.
Yeah, brilliant. A real range of elements to the proposition. It sounds like there's a fairly high degree of flexibility with
exactly, and that's also was maybe one of the topics we really decided that to make this kind of more like an engine for the industry, like a technology service layer, and less like a product company.
Yeah.
We decided also to really be broad in terms of weather data and then technology data sources, not to have just one solution in it. Since again, what René said, what we can do, we can really then normalize all these coverages and utilize the same architecture and approach. And we don't. We also have built the whole proposition based on, for instance, standard methods. Also, my history with the industry, building up technology standards and data standards, like at the core, is very important. That what we've built up can be utilized as a tool for the industry. And the industry then at the end knows the customer best. So the MGA know exactly what type of travel arrangements the customer doing, how long, what type of weather events might come in. And then we are basically like the Lego construction box engine, where you can plug in, you can take the yellow and the green component and make your own product on the risk one. That's also the self-servicing component, which we continue to build up. Ideally that you really have then an entry point for underwriters and for MGAs and for people who are in the market. Say, look, I have a new proposition, a small use case. And as René mentioned, we don't have to go with the 10 million premium. We can start with a very low amount of risk, but we build this product up with an MGA, and then you fine tune it for your local markets and your local demands, and then you can also grow with that. And that's also our proposition on that. Data sources are also, as we mentioned beforehand, that they're coming in new data sources. There's new. There's also new. There's kind of an agility you require. You cannot just say, I'm doing now my product design, and then I just can go to sleep for another 10 years. Now your product need to be redesigned after 2 to 3 years, and with these new data sources, with these new insights, you need to add that, and so the whole process is much more dynamic, and that's why we built the platform to enable this dynamic nature of risk.
Yeah, well, it sounds pretty good to me, but also look, I think you've done remarkably well not to talk at all about your the announcement that's just come out, right? So there's equally recognition in the market of significance of what you're describing. So let's spend a moment just pausing on that, and firstly, congratulations, right?
Yes, thanks. Also, really for us, we've been selected here in Switzerland to get a significant grant with our project to build up like a cloud insurance product, and here for us has been a very strong success to get the 2-year grant from the Swiss government on that, which also enables us to really build up on the technology, also on the risk transfer side, more clarity. We've seen, especially on the cloud, that there is kind of ongoing also concerns from regulators like the Bank of England on the current cloud risk exposure of the insurers themselves. And this is a multi-billion risk which is already recognized. And we really believe that this risk needs to be better controlled. And what we are building up is kind of the way how the insurance industry can better basically monitor the risk in a way that also utilizing Riskwolf technology. And our role here really will be to build up an independent monitoring, since again, in between the carriers and in between the cloud providers, which we believe needs to be independent. And that's definitely a great success, and also shows the innovative potential of that. And that's something I think for us, it's definitely a recognition of what we've built up so far, but also it's a strong input also to move on with the technology risk, while still supporting the weather topics. We see both kind of pillars. Yeah. Both are kind of where we see both can be really applied well in parametric coverage, and also will not go away in the next 5 to 10 years. So that's the other one. The risk is not going away. It's the other way, and the exposure is building up in the next 5, 10 years. Not going away, and so in 5 years nobody is anymore on the cloud. It's the other way. In 5 to 10 years, 80-90% of businesses are on the cloud.
Yeah, it's the market is fueling the growth in the need for this type of solution, right? It's as more people are using the cloud, get a greater value from it, and so using it more heavily as they're ingesting a greater number and volume of data sources, higher fidelity. It doesn't sound like it's going to be one in decline anytime soon.
It's
right?
not, the usage is not declining, but cloud providers, they're not going to be endless amounts of additional cloud providers. So there's always going to be a kind of you know who is around, who provides the services, and vulnerability and dependencies are there. And naturally, what we've seen also in these reports, insurers do not even know at the moment which cloud providers are utilized by their clients. So there's also some information gap, and with better monitoring, you basically can build up also better exposure control, which is important in this market to know the exposure. And this is the type of things we will do also next 2 years, give more insights to the market here.
Brilliant. Gents, well, listen, it's been a real pleasure hearing your thoughts and perspectives, and also your news. That's great. We're just about at time now, so listen, any other parting words of wisdom or anything else you'd like to add before we wrap up? I'm kind of putting you on the spot here to, I don't know, tell a joke or do a dance.
There's a lot of wisdom now.
I'll make a balloon animal. Hold on.
Exactly.
No, you always, the wisdom for startups is always you need to get going. You need to try to always understand better your clients, the industry, what they need. Do you need to then give them clear value propositions? But still, there is a huge opportunity for the insurance industry to a little bit move ahead of the curve. And we in a way, our point is don't try to be too much beyond the curve as an insurance industry. Try to be beyond, more ahead of the curve, also in terms of new data sets.
Yeah.
Because it's essential that the industry understands this.
Well, I think also it's definitely just start exploring with this. Also, even if your underwriting guidance says we're not doing any parametric insurance, still you should become familiar, or the underwriter should a little bit play around, even if it's just a kind of a dry run exercise with any actual thing. But it's just much more getting into the data, getting into the concept, and then once you have this, then I think it's also not anymore like a new topic. Then it's also usually quite straightforward. I mean, if you explain the concept to somebody who has no clue about insurance, it's quite obvious.
Yeah, wonderful. Guys, what a way to wrap up. Thank you again. I really appreciate your time, and another congrats, and look forward to seeing more news and Riskwolf's naming lights coming soon. Thanks a lot.
Thank you very much.
Thank you, Matt. Thank you. Bye.
Bye.